The broadcast is now starting. All attendees are in listen-only mode.
Hello and welcome to our webinar BPM for Banking, jointly presented by Newgen Software, a global software vendor in the space of BPM, business process management, enterprise content management, and customer communication management. And Bank Dofer, one of our prestigious clients and one of the largest bank in the Gulf region. I thank you all for the overwhelming response we have obtained for this webinar. I'm Darpan and shall be your host and moderator for this webinar today. Today we have with us Mr. Girish Sridhar Nair, who is head of technology transformation department at Bank Dofer, and Mr. Ritesh Verma, who is head consulting at Newgen Software. Ritesh will discuss the changing trends in banking and how business process management can empower you with agility to embrace these changes. And then Mr. Girish will join and tell you about role of BPM in Bank Dofer's transformation journey. At the end of the presentation, we'll be having a Q&A session. We request you all type your question in the question window of your GoToMeeting anytime during the webinar, and I shall take them up at the end of the session. So with this, over to you, Ritesh.
Thank you, Darpan. Uh, the topic for today is BPM for banking, decoding customer in the digital age.
Please go ahead, Ritesh.
So we've seen banks transform. We've seen banks to kind of undergo transformation from a teller-based system to today a mobility-based system and an internet-based system. And then further, digital has taken over. And digital has taken over like nothing else. So if you look at Steve Jobs' Apple, it has transformed things like never before. What has happened over times, in 1993, it was probably illegal to do banking through the internet. However, today, what we notice is that things have changed drastically. The human interaction, which was there in 2012 to be 15%, and omni-digital, which was 27%, has changed drastically to 46% today in 2017, online dominant, digital hybrid, and mobile dominant, to human centric only being 10%. And this would further be going down over time. An interesting fact is 40% of the customers prefer online banking services today. With the millennials coming over, this has undergone a drastic change. People no longer prefer a brick and mortar kind of an outfit to do banking. However, still less than 10% sales happen digitally in retail banks, which is an astounding fact. Although people prefer online banking, sales only comprises of 10%. Also an interesting fact is 85% of the prospects who initially visited a bank website failed to convert to to an actual bank customer. Most of the people who prefer to open accounts do it via other means rather than an online website. Retail banks today are at risk. The biggest transformation that is happening is in the retail banking segment, and it is at risk. It is at risk of being displaced through various touch points that are being opened up, maybe bitcoins, maybe visibility, maybe mobility, computers and others being diminished in terms of digital wallets are taking over, Google Pay, Apple Pay and others are taking over, and also being disintermediated, which basically means new technologies start acting as intermediaries and fintechs play a bigger role as compared to any other than a bank. What has happened is what should be straightforward in terms of a customer onboarding journey of an application being received, uploaded, verified, and closed. It has become a very, very tedious process, and the difference is huge when it comes to fintechs and banks. While a bank would need a customer to kind of visit a branch, meet the representative, wait for the received decisions, travel back to his home, receive funds. So a typical journey like this for a bank has been transformed into a digital journey by fintechs, while apply via mobile phone and get received funds or probably a decision instantaneously. So this brings about a huge difference in the traditional and digital way of doing things. And it's impotent for a bank to kind of work enormously to kind of catch up to the digital world. But why can't banks be that way? Why can't everything be digital like we've been talking about? There is the elephant in the room, which is hindering the banks to become truly digital. There is the regulatory pressure, which requires a bank to kind of get inputs, physical wet signatures on an application. Neobanks are becoming much, much more aggressive. Disruption from other industries. Starbucks is opening an account, a bank. Other online methods like Paytm and others are opening accounts. The process is disconnected within a bank itself, which poses a problem of having disconnected, disjoint ways of doing things entirely. As Brett King says, it's all about experience. Either banks remove friction or someone else will. We've seen it happening much more aggressively in today's world, and it cannot be, it'll get even worse as we move forward. What is required is a low-code application platform to deliver digital, which basically means the concepts have to be delivered at the speed of light, which can happen through a low-code digital platform, a platform which is there to quickly conceptualize, create, and deliver what is required in an agile world today. What we have done is we've created a low-code platform which connects processes, content, communication all together. There are integrations to the backend application like the core banking system, like the credit scoring system and the others. And there is the integration with the ecosystem, which is the external rating agencies, external credit scoring agencies and others. Using this, it is delivered on a host of media for consumption by shared services, insurance, banking, government, and others in a unified manner. What Newgen solutions have done for digital banking is it has created a whole lot of point applications which is built on digital low-code platform in order to deliver everything, be it consumer banking, from lead management to collection and servicing, wealth management from customer onboarding to customer lifecycle management, FATCA CRS, which is a compliance solution, service management, and others. Commercial banking when it comes to SME banking, peer-to-peer lending, trade finance, and supply chain management. Trade finance automation in terms of documentary credit, documentary collections, standby LCs, trade loans, and others. Also, service request management plays a very, very critical role in the overall in the overall working of an organization. So service request management or enterprise service management is becoming very, very critical in today's times. Moving forward, let's kind of see how things become very different through our character called Sarah. Now, Sarah is a millennial. She likes to interact digitally with the overall system, is a very, very aspiring young lady who is stable in her career and wants to kind of enjoy all walks of her life. Sarah would be an ideal customer for you, right? Because she has the right money, she has the right conviction, she has the right motives to kind of become a customer with you. And maybe she's an existing customer with yourself. Now, if we'd failed to onboard her within minutes, someone else would. So the digital competition is great, and we need to all understand that finally it'll take over if we don't. So how do we achieve her being a customer with me within a few minutes? Let's see who Sarah is out of the whole lot. So Sarah drops hints on Facebook and others. So what we've noticed is that a customer, before opening an account or availing any services with a bank, consults their peers, their family, their friends through a host of other channels. She drops casual hints on the website and probably where we can pick up and make it work. Having picked up, she goes to our Facebook page as a bank where we pick up signals and send customized messages to her. So what we are doing in effect is sensing incoming communications, context analysis, whether it's a request for something new or it's a complaint or something else, and delivering a personalized response to the overall system. Having identified her profile as such, we can offer her savings account, zero balance account, student savings account, and a host of other customized bank accounts which she can actually work on and deliver. So what we are doing is dynamic product selection, product comparisons to suit her profile, and finally, rule-based cross-sell and upsell opportunity for, say, a credit card, for a lending product, or things like that. So Sarah uploads relevant documents, takes a selfie with the ID proof. The selfie is compared to any national ID that can be there, or if Emirates ID or other IDs are available, it can be scanned and put into the system. Any support that is required can be through video conferencing. It can be clarified and rectified for doing the appropriate KYC. Sarah completes the application on her mobile, and while she is at it, AML checks, blacklist checks, duplicate checks, and other checks are done in order to validate that she's an authentic customer. Having said that, Sarah receives real-time status, and finally she is onboarded within a few minutes. Now, it's not always this simple as we encounter in a physical world. What we notice is that Murphy's law always strikes when you need it the least. So Sarah probably initiates it on the tablet. However, she's a millennial, so she gets distracted by a Netflix movie going on, or probably a nice Facebook post by someone else. And so she probably initiates it on a tablet, fills it out on a laptop, and completes the whole application on a mobile. While she's doing it, the omni-channel experience kicks in. It's seamless and it resumes saved applications. Sarah is a good citizen. However, the blacklist check is not a blacklist check or credit check is not up to place because of certain last credit card bill she probably forgot to pay. So she is then flagged off. However, while she's flagged off, she's consulted through the process. The entire process is understood that she probably forgot to pay the entire thing, and that is the reason why she has been flagged off. So the video conferencing by a friendly associate would help work on this. The real-time tracking and monitoring happens. While all this is happening, she feels served and she becomes a happy customer for you. So while in times of crisis as well, if she is consulted in the right way through the platform, entirely it can be worked around. Sarah then becomes more than a customer for you. She becomes an advocate who would then go about vouching it to others and saying that, look, these guys work. Let's look at a success story of a large bank out of India from digitization to digital, how the entire journey moved for them and how they were able to make it work. So we started in 2000 to 2005, where we were working aggressively with them in order to digitalize their documents. Enterprise-wide DMS was implemented for the bank as well as the group of banks, which basically means the subsidiary of insurance, the manufacturing and others. Cultural shift from paper to e-documents was implemented within 2000 to 2005. In 2006, they embarked on the journey of uh, trade finance or trade operations centralization, and they implemented more than 100 plus processes in the region of trade operations with us through simple workflows, basically capturing it through all their branches, centralizing it out of a central location in Mumbai, and then taking the processing forward. The year 2011 to 2013 was towards standardization, tighter control on processes, expansion across assets and liabilities, and standardization of processes. So what is happening is through the digitalization program that we started with them, the entire standard operating procedures were implemented in 2011 to 13. They embarked on the journey of tab-based account opening, where you see a famous film star walking up to them and then saying that, look, I can open accounts while I'm enjoying myself and not giving up on my family time. More channels were introduced, and in 2017-18, we worked towards the journey of BPM 3.0, where the platformization was done, and these guys were then able to work out on applications which were built on low-code platform, such as loan origination and trade finance. So what we have done along with them is through the low-code application development platform, we've started small and we've grown big along with them. So everything works out in an agile manner with the bank while the customer is actually reaping benefits of the whole platform. So that's partnering with Newgen through a host of solutions from basic application to an end application being developed, which is for reaping results and deriving benefits. That's it from my side. We would take up the questions at the end of the seminar and we'll take it forward. Over to you, Darpan.
Thank you, Ritesh. Now, Mr. Girish is going to present his presentation, and over to you, Girish.
Thank you, Darpan, and thank you all for inviting me to this webinar. Bank of partnered with Newgen, long back in 2009 for the document digitization. That was the start point with Newgen. Then later on, we also partnered with Newgen for the BPM. So the purpose of this presentation is to just brief the role of BPM in our whole digital transformation journey, which we have been going through for the past few years. Bank of is the second largest bank in Oman. And we have more than 70 branches. We also have an Islamic banking window. We have a portfolio of corporate banking, consumer banking, treasury, and project finance. We also have more than 1,500 staff. This is a brief about our profile. Now, straight away coming to the pre-BPM days, it was maybe before 2011, 2012. We used to have especially the loan processing, etc., happening from branches using paper. So customers will come in, the physical forms are manually filled by the bank staff. Then these documents move from people to people, and in many cases from branch to head office or the back-end processing center. Then it goes through different levels of approvals, and it takes quite a number of days to have a loan approved. This was our scene, 10 years back. Now, that is when we realized that we need to automate. We need to have digital origination platforms. We need to automate the loan processes, etc. Now, what were the challenges? There were a lot of non-uniform processes because people used to interpret the policies and procedures in their own understanding. So, which means the policies and procedures, the controls were not uniform. There were a lot of information we need to fetch from different systems, something from the core banking, something from the AML system, something from the KYC. There are different systems. We had to use it manually and then put it all together to manual forms and then process the application. There were a lot of duplication of work. There were a lot of difficulties in actually controlling the operational efficiency parameters. We were not able to exactly having visibility on productivity of people. There were a lot of challenges, in timely attending to, the business demands and the regulatory demands, etc. So that is a brief about the pain points we had. That all drove us to, BPM per se. So taking our journey, we basically started in 2012. We were looking originally for a loan origination system. So we looked at different solutions available in the market. So it was not just the retail, we started with retail, but then the wholesale banking had said, why not me? Of course, corporate also we need to automate. So then, otherwise retail loan origination systems were plenty. There were a number of solutions available in the retail, but very few on the corporate automation side. That is when we wanted to look at something different. We thought, why we look for different solutions? Why not look at a platform which can automate both? So that is when we selected Newgen, the BPM platform that was called OmniFlow, and then we embarked on the retail loan as well as corporate credit proposal automation, two processes. In the retail, we looked at personal loan, housing loan, which was having higher volumes, and then corporate credit proposal, which is the primary job they wanted to automate in the wholesale banking. Then we went on to create the loan eligibility process, which actually is the foundation for the first step for the loan origination. And even to create offers, we wanted to look at the eligibility calculators, considering various parameters, which was fetched from various other systems as well. So the benefit that happened that time was we could avoid all those manual work. We could avoid all those physical movement of papers. It all got digitized. The workflows got automated. So from a few days to hours, our processing, the turnaround time have reduced significantly. This is what happened at that time. So that made us to realize the value of a BPM platform, and that is when we started evolving, expanding the BPM platform to several other processes. So in 2012, 2013 itself, after those initial two processes, then we went on to automate various other processes in both these business units, like the ad hoc referral processes for the ad hoc approvals in trade services, in corporate credit facility approvals, ad hoc approvals, etc. Then we also looked at credit card origination. We thought, okay, let's automate that also. That was taking a number of days. Then there were demands on developing those the risk-adjusted return on capital calculator, because that was one of the key parameters we wanted to look at for the wholesale, the corporate credit approvals. This was the beginning. Then we went on to other processes. In 2014-15, we completely automated retail customer onboarding and account opening, which means the customer walks in and walks out with a debit card in hand, instantly issued. All happens in less than 10 minutes. All the processes were automated, including the KYC, including the various levels of approvals, and a debit card issuance, the creation of the account back in core banking. Everything was automated, all from the using the BPM workflow. Then we automated the international remittance, the cross-border remittance, which is also one of the pain areas. There are a lot of different checks going on up to from initiation till the SWIFT message is sent out. So this process was seamless, automated, including covering the AML checks and various control processes within. Then we automated complaints management. That time, the point of sale, merchant acquiring process. There was the relationship management. There were also relationship management processes that were to be automated. There were a lot of demands, like government client visit processes. They wanted to, capture the details for every visit and create follow-up alerts. And then the relationship management process itself get organized and well controlled, and also create a lot of visibility on the client acquisition and relationship management processes, all adding to business value. Then in 2016-17, the ACH, RTGS, the payments, the domestic payment processes that got automated. The SME loans processes got automated. The priority, we have a privileged customer, separate relationship management process that was automated. We also digitized completely the corporate documentation, corporate credit documentation, completely digitized. Even the historical ones we archived and linked to the accounts on the systems, including core banking. So to brief, again in 2018-19 of recently, we moved to a more advanced credit corporate loan origination system on the new IBPS platform, which was launched by Newgen a couple of years back, which makes it even easier to manage those processes, changes, the authority metrics, the approval workflows, etc., much more easily within our control. Then we also automated trade finance process. last year, which means all those the letter of credits and guarantees and the collections and the negotiations, all these processes got seamlessly automated, also integrating with core banking. Then there are a number of processes I listed in the presentation. Don't want to go through all of them in the interest of time. Just to summarize, the business benefit per se, if you look at from a high level, it can be classified into process efficiencies. We were able to streamline the overall processing. We were able to get faster response times, as I mentioned before, from days to hours. Okay, we could take advantage of turnaround time benefits. Enhanced risk mitigation, because we have clear visibility, we have better control on data, we have better control on documentation. We also have better customer experience because the processing happens faster, customer service is faster, and less work for the customer, less work for the staff. So there is also delight for the staff as well in terms of data input, manual work, etc. So the staff was also happy. Then the differentiation in service, because customers get a better service. And all this added up to our growth and profitability. Revenues, of course, increases with more business. We have reduced operational expenses. Whatever was done manually earlier, many were automated. So we could also drive our other transformation agenda, like the Lean Six Sigma processes, etc. So all this was supported by the BPM platform in brief. So I just covered what was the role of the BPM per se within our overall digital transformation journey, while we had a lot of other initiatives surrounding that. I didn't touch upon that, but all this was supported by the BPM part as a major significant component in our digital transformation journey. We, of course, in future, we look at more on digital onboarding, more on digital financing. We also will look at we are one of the very few banks, maybe the first in Oman, to have a fintech partnership like Ripple for cross-border remittance on blockchain platform, to have instant remittance cross-border, such things. So all this will get also integrated to BPM platform, because that is our internal automation platform. So there are a lot of opportunities in future as well that we look at, and there's a lot of the number of initiatives which are already in progress. So that is briefly about Bank of the role of BPM in the digital transformation journey, and the partnership with Newgen. That's about for me, and open for questions.
Thank you, Girish, for sharing your transformation journey with all of us. Our first question of the day is for you, Girish. That is, how is it best to embark on a BPM journey? Start small and then grow, or just start big?
Well, from our experience, start small. Start small and very clearly on agile approach, because you're changing the processes in a bank. You're going to impact a lot of people. Their life is going to change. So you cannot have a big bang change and sustain it easily. So it is always better go on the agile mode, start small and grow. That's what we did as well.
Well, thank you.
Hope that yeah.
A second question of the day is for you, Ritesh. The question is RPA and BPM are the same thing, or is it different?
Well, it is understood that RPA and BPM are the same thing by many people. However, what I'd like to comment on this is that RPA and BPM are not competing technologies. They basically are complementing technology. So if you look at majority of the places, RPA is used for non-disruptive and disruptive integrations. However, BPM does it for end-to-end. So if you look at an overall process per se, if I need to kind of work with somewhere where extraction is involved, where picking up data from an external website is involved and pushing it into a third-party system, is where RPA comes in. However, if you look at where an overall process is involved, where people, processes, systems, and everyone needs to work together, both complement each other. So the new device term that we have devised is RPM, process management. Look at the process end to end rather than just in silos. I think Girish also has a few instances of it, which may be helpful to understand the overall perspective. Girish?
Yeah, well, Ritesh, we have implemented BPM as well as RPA. We also use UiPath RPA platform for robotic process automation. You are right. RPA is mostly for the repetitive processes, human processes which are repetitive in nature, which can be automated. That human effort can be changed. The people can be redeployed. We have done that. Now, here again, that is to be differentiated from BPM, because BPM does a lot of processing, validations, etc. within the system, which have more depth. Whereas RPA is mostly used, at least in the initial stages, we started with simpler processes, less risky, where people can be taken out and a robot can be given to work. Now, RPA, again, understand RPA is evolving. RPA has still not reached the maturity to, have very complex processes handled. So there is risk involved. However, in BPM, we have the option of, in-depth validations and also in embedding manual steps within where control is required. So it complements each other. In fact, there can be handoffs from RPA to BPM at some stage. We have cases where RPA is using the robot is using the BPM processes, and at another stage, a manual intervention comes in where a control is required. So it is complementary, I would say. And again, BPM is more matured today. RPA is still maturing. That is from my side.
Thank you, Girish. Our next question is for you again. Is it advisable to opt for point solution or BPM based system for applications such as loan origination?
Well, both will have its own merits. However, from our experience, as I mentioned in my presentation earlier, we were originally looking for a point solution to automate loan origination. However, we realized that we get better value and flexibility by having a platform, where we can automate both and multiple other processes. Now, these package solutions will come with its own, it has this experience, so it comes as a package. We have to adapt to that. While the BPM, we can decide, customize and configure it to our own requirements, and it is more suited because people adapt it even better because it is more custom for us. At the same time, quicker rollout. Secondly, things like corporate origination is very difficult to have a standard platform because it varies from bank to bank and organization to organization in terms of the workflows and the kind of processes and the type of appraisals, credit appraisals that we do. It varies. So that cannot happen on a standard packaged application. It needs to be varied, different from different banks. That is my take on this. Maybe in retail, it is more suitable for a point based, but not in corporate for sure.
Okay, thank you. And a last question of the day is for you, Ritesh. That is, how is BPM applicable in the digital age?
Well, as I mentioned in my presentation as well, digital is something which has taken over in a big way. typically BPM had been earlier working on back-end infrastructure related processes for shared service setup and things like that. However, in times of today, if we look at a nice front end and thread it down to the back end, BPM becomes very, very relevant in terms of the digital age. It helps taking care of silos of processes, information, and removing any silos that may be present and taking it to the next level where everything works as a unified system rather than in bits and pieces. So BPM is very, very relevant in today's times of digital, and I think there couldn't have been a better time.
Well, thank you so much, Ritesh and Girish. Thank you for sharing your insights on business process management used in banking. And thank you, Girish, for sharing Bank Lofer's transformation journey. Thank you to the entire audience for your valuable time and your tremendous response. We shall be sending across the presentation and the transcript for all the questions to you. Goodbye and have a great day ahead. Thank you, everyone.
Thank you.
Thank you.